Hey guys, Luke Lango here, Chief Investment Analyst at Investor Place, and I'm joined by my colleague Charlie Shrem, crypto pioneer, legend, genius when it comes to the cryptocurrency space. And of course, we're here today to talk about the recent events in the cryptocurrency market. It's been wild, it's been chaotic, it's been scary, it's been spooky, it's been frightening. It's been all of those things put together. And so if there were ever a time that you needed to hear from both myself and Charlie with two different perspectives that come to the same conclusion about the cryptocurrency markets, that time is now. So over the next 30 minutes, 20 to 30 minutes, we're both going to go over, what happened in the crypto markets over the past few weeks, why it matters, to what extent it matters, and what our outlooks are for cryptocurrencies over the next 12 months, 5 years, 10 years. And spoiler alert, we're both still very bullish on the cryptocurrency space, both over the short term and the long term, because we believe in the technology, we believe in the viability of it to do good in this world, to create systems, processes, services, and products that are faster, fairer, and freer than the incumbent processes, products, services, and systems. And so from that perspective, we do believe good technologies win out in the long run. Cryptocurrencies will be no exception. We've just had a few bad actors and a few bad events over the past, 3 months, 6 months, 9 months, 12 months. And those bad actors, unfortunately, are polluting the space, but the technology is still very pure. There are still a lot of great actors out there. Charlie will tell you about some of them, and they are going to carry this space forward. And investors who get aggressive about cryptocurrencies when they're down 80-90% like they are right now, well, historically speaking, that's been the time to get really aggressive. And again, we do not think this time will be different. So that's a quick preview of what's to come. But without further ado, I'm going to let the man, the myth, the legend himself, Charlie Shrem, take it away. Charlie, how you doing today?
Thank you, and I'm doing okay. I'm doing pretty good. I'm sad about what's been going on in the industry the past few weeks, but I will say that I'm not surprised. We've seen these cycles before. We'll see them in the future. Things happen. I'm really sad about those folks who have money stuck in whether it's FTX or Voyager or Celsius or one of the dozen other companies that are entering bankruptcy over the last few weeks. And it hurt a lot of trust in the community. And I would be coming here and telling you guys this is the first time this has happened. But unfortunately, in order to keep building and growing and moving forward, things do break sometimes. Going back to like 2011 and 2012, even before Mt. Gox, crypto exchanges like the website cryptocurrencyexchange.com, Bitcoinica, some of these other ones went down and took user funds. Some of them were in bankruptcy for 10 years. It took a while for people to get money out. Mt. Gox folks were people who lost money in 2013 when the largest exchange, Mt. Gox, had 80% of all crypto volume back then, Bitcoin and some of the other smaller coins that were around at the time. I mean, back then when Mt. Gox crashed, there was nowhere to actually check the Bitcoin price. Like, things stopped for days, weeks. We had to rebuild from nothing. And this isn't as bad as that, but it's still really, really bad. Out of all those times that things crashed, we had the 2017 ICO market, 2014, 2015 bear market, even the ones before in 2011. The opportunities that came out of those really extreme fear moments where fortunes were made and were the companies that we use today that are still successful. Kraken, Coinbase, BitPay. These companies have been around for 10 plus years in our space. How? It's because they know how to weather the storms, but they were built out of bear markets. And so that's why I'm really sad, but at the same time, I'm highly optimistic that we're finally at the end of this heaviness that we've been going through over the last year in the crypto space. We're finally at that Lehman Brothers.com crash. I mean, this was big. FTX was $16 billion that just collapsed overnight. I mean, so here we are. Now we're at the other side of it. What are the opportunities and what are we going to do next?
Right, Charlie. I mean, the fact that you bring up Lehman Brothers is a very interesting comparison, because that's what a lot of people are comparing the FTX fiasco to, is that it's crypto's Lehman moment. A major exchange, major player in the business that a lot of people thought was rock solid ended up being not rock solid and sank. That was Lehman Brothers, and that is FTX. What people need to understand is that Lehman Brothers was the final straw of the financial crisis, right? Lehman Brothers declared bankruptcy in September. The stock market crashed for about a month, and then it actually stabilized into the end of the year and stuck around those lows into January, February, March 09 before staging a face-melting rally in March, April, May, July, so on and so forth, 2009 and 2010, 2011, and that started a decade-long bull market. So Lehman Brothers, people comparing the FTX fiasco to Lehman Brothers, calling it the Lehman moment, it sounds spooky. It sounds like a doomsday comparison. But it's actually a pretty bullish comparison because, again, the Lehman Brothers collapse was the eighth inning of the great financial crisis. And if the comparison holds true, then the FTX crisis could be the eighth inning of the crypto crash in 2022 that extends into late 2021. So I'll speak a little bit on why I believe that is the case, some of the macroeconomic drivers there. But Charlie, you talked about how a lot of these companies, BitPay, Coinbase, companies like that, they've been around for 10 years. They've weathered the storm. They were innovating during periods like this. Can you just tell some of our subscribers, okay, here we are in 2022. What are some of the in late 2022? What are some of the innovations, some of the spaces, some of the projects, some of the stuff that you're seeing on a ground level? Because I know you're one of the most connected people in this industry. What are you seeing from an innovation perspective at the ground level that gives you faith that these projects will weather this storm, will make it through, and we're going to see the next iteration, the next generation of the Coinbases, of the BitPays? What are you seeing right now?
That's a great question. And I've spent every day over the last 2 weeks since this collapse speaking to the CEOs of almost every major crypto protocol and blockchain and network out there, from the Cosmos ecosystem to Celo and everyone in between, Ethereum developers. And I'm asking them the same thing. What are you building? What are you building in the wake of the FTX collapse? What are you building now that you're not going to release for 6 months that we could look for? What are the trends? Where do you see market demand? And they're telling me two things. They're telling me they're building out the products and the services to replace what centralized exchanges were doing. And the centralized exchanges were doing a lot of infrastructure work that doesn't actually exist in crypto. I thought it was built more. I thought there was more built, but I was wrong. There's still so much that needs to be built. And we're talking about order matching and being able to connect different types of assets together, but also have the data and the messaging go through with those assets, because you can build all types of things from carbon credit markets to mortgage markets and everything in between. But what's really cool is what I'm seeing now is we've been focusing over the last 2 years on blockchains, on the networks themselves, those layer ones. And then we started to look at layer twos. But I think now, and this is very, very, very early, this is the most high quality information people will get right now. No one is talking about it. Where to invest is in layer zeros. See, layer zeros exist outside of blockchains, and they're agnostic. So it doesn't matter what blockchain is successful of the day. These protocols can connect to any other blockchain and be able to bridge and offer relationship mapping between. So you and I in the future will hold a token, but we'll never need to know which blockchain that token's on. So for example, USDC, the stablecoin, is experimenting with this right now. They're building out USDC on Tron, USDC on Ethereum, USDC on Polygon. But in the future, USDC will just be USDC, and it doesn't matter what blockchain you're holding it on. And that's what we're going to see in the next 6 months from now.
That's exciting stuff. I mean, that just goes to show you that the innovation has not stopped, just like Charlie can say it didn't stop during previous bear markets. And crypto has seen its fair share of bear markets and crashes that have been bigger than what we've seen today.
Always.
Innovation didn't stop back then. Innovation hasn't stopped now. And that gives me confidence in understanding, okay, as soon as the macroeconomic picture improves, then there is a pathway for cryptos to stage a generational rebound, just like they did after the COVID crash, just like they did after the 2018 crash, just like they did back in 2014, 2015. There is a pathway for history to repeat once the macroeconomic headwinds clear. Because something I think a lot of people have to understand, a lot of people they do understand this, but they forget it. And amidst all the headlines, the media loves to sell fear. The media loves to get people freaked out about cryptos like it's the end of the world. But the fact of the matter is, cryptos didn't start falling until stocks started falling. They fell together. They fell together. It's not like cryptos have been crashing for 5 years and stocks just started over the past 12 months. No, both peaked in November of 2021. Both peaked in November 2021. And both have come crashing down. So it's very reasonable to say that the driver behind crypto's collapse is macroeconomic in nature. FTX doesn't find itself in a liquidity crisis unless crypto prices have dropped 60%. Luna doesn't find itself in a liquidity crisis unless crypto prices have crashed at that point. These firms don't find themselves in crisis just because. They find themselves in crisis because they weren't prepared for a collapse in crypto prices. And when that collapse in crypto prices happens, then those firms get into crisis mode. So the crisis is actually an output. It's not an input. The input is a crash in crypto prices. And the crash in crypto prices started when stocks started crashing too. So I think it's fair to say all of this really, the first domino to fall was the macroeconomic picture. Once the macroeconomic picture deteriorated, risk sentiments went completely bye-bye, that's when you started to see all of these problems emerge. So the flip side of that coin is that once the macroeconomic picture improves, once you start getting some clarity, once the clouds start to rise and the sun starts to shine again on the macroeconomic side of the ball, that means stocks can rally again and cryptos can rally again. And cryptos, as we know, can rally quite a bit, very rapidly, very significantly, once they start rallying again. So what I wanted to do on this call, my sort of input here, is to address the macroeconomic side of things, to give viewers a pathway forward for macroeconomic developments. That pathway forward, in my opinion, is an overwhelmingly positive one. That our team is of the belief that all of the headwinds, the macroeconomic headwinds which dragged risk assets in 2022, are going to sharply reverse course in 2023. Inflation has already shown signs of topping and decelerating quite meaningfully. That is because supply chain hiccups from the COVID-19 pandemic and subsequent lockdowns have completely smoothed over, rolled through the economy, and they're gone. You're seeing demand destruction happen. I just read a Bloomberg New Energy Finance report. Gas consumption, oil consumption in Europe is down 25% from normal levels right now. You're getting demand destruction. You're going to get more demand destruction because you're seeing a bunch of layoffs in America now. Meta just announced 11,000 people got fired last week. Amazon announced 10,000 layoffs today, actually, on Monday.
Just
November
today,
14th. Yeah. FedEx is furloughing drivers for the winter, freight drivers. So you're seeing these massive layoffs. Alphabet's on a hiring freeze. Apple's on a hiring freeze. I just looked up layoffs.fyi. It's a site that dynamically tracks layoffs. November layoff totals so far, we're only 2 weeks in, 25,000 people have been laid off in November.
Wow.
That is more than double October's number, and we're only 2 weeks into this month. So at this pace, that means by the end of the month, we're going to be up about fourfold month over month. That is a massive spike. The Fed is going to find it increasingly difficult in early 2023, in January, February, March 2023, to stay aggressive on rate hikes when, one, inflation is falling hard, and two, unemployment rates are rising. Now, that second component is the really important component, because the Fed can play the tough guy and act really, we're going to hike rates, fight inflation tooth and nail. They can say all that so long as the regular American's not getting hurt. They don't care about crashing the stock market, about crashing portfolios. They know they'll bounce back. They don't really care about crashing real estate prices. They know they'll bounce back. They don't really care about all these hedge fund managers and Wall Street veterans saying, you guys are going too aggressively, stop. They don't care about any of that. But what they do care about...
They don't care about crypto prices.
They don't care about crypto prices. They don't care about any of that stuff. What they care about meme JPEGs, all that. What they do care about, Charlie, is Americans and their jobs. And as soon as Americans start to lose their jobs, the Fed pivots. Always. It has never not been the case where the unemployment rate starts to rise 10, 20, 30, 40, 50, 60, 70, 80, 100 basis points, and the Fed doesn't pivot. When the labor market weakens, the Fed pivots. Full stop. Because that's when the pressure's on. Once the Fed realizes real Americans, hardworking Americans, not even related to this financial economy, not even related to the madness of asset prices, of cryptos, of stocks, of any of that stuff, just regular Joes who just clock in 9 to 5. Once they start getting hurt, then the Fed feels pressure. Political pressure, they get their own minds in it, and they have a bunch of media pressure. So what I'm saying is that by early 2023, by February 2023, December, they're going to go 50 basis points. Then it's going to roll around January. They're going to have their February meeting. That's their first meeting of 23. What I'm saying is at that point in time, the unemployment rate is going to be about 50, 60, 70, 80 basis points higher than where it is today, just given all the layoffs we're seeing. The big firing trend has started. Consumer sentiment's going to be washed. The Fed's going to be feeling that pressure. Inflation is going to come down probably 2, 3, 4% by then. I think we're going to be much lower by then, given what we're seeing in demand destruction side of things and with oil prices and commodity prices. So you're going to have a Fed in 2023 that's going to be looking at a much different picture and is going to be feeling a lot more pressure from the labor market to cut interest rates. Or not cut, but at least stop hiking. And so I think the evolution of the Fed in 2023, the evolution of the Fed in 2022 is one that's continually got more and more aggressive throughout the year. In 2023, the evolution is going to be a Fed that's continually got more and more dovish throughout the year, less and less aggressive throughout the year. So again, these trends are going to reverse course. Inflation in 2022 was rising. Inflation in 2023 is going to fall. The Fed in 2022 is consistently getting more aggressive. In 2023, they're going to consistently get less aggressive. The economic outlook in 2022 continually deteriorated. Every single month, it looked like the outlook was getting worse and worse and worse. In 2023, that's going to change. In 2022, all bond yields did, fixed income yields did, was go higher and higher and higher. In 2023, they're going to go lower and lower and lower as inflation comes down, as the Fed pivots, as the economic outlook goes more towards a lower interest rate environment. So all of these macroeconomic, big picture, fundamental trends that were in place in 2022, the stage is set for them to meaningfully reverse course in 2023. And as they do, risk assets will respond in the same way. They're going to change course too. Stocks are going to go higher. They crashed all year in 2022. They're going to soar in 2023. Cryptos crash in 2022. They're going to soar in 2023. The macroeconomic backdrop is setting up for a huge reversal in every single major financial economy trend out there right now. And the most potent of these is cryptos. Because we know from history that when risk sentiments are poor, when the trends are going in one direction, cryptos get crushed really hard. Down 80% in 2022, down 80% from their highs. When those trends reverse course and risk sentiments improve, well, cryptos are off to the races, and much more than any other asset out there. Stocks go up 100%. Cryptos are up 400, 500, 600%, maybe 1,000%. They are a highly levered trade on risk sentiments. So as risk sentiments return in 2023, you're going to get a rising tide in cryptocurrencies that will allow us to forget the FTX crisis, move on, and make money in these markets. Because again, remember when Terra happened? Everybody thought it was the end of the world. 2 or 3 months later, we weren't even talking about it. FTX, right now, it's the end of the world. 2 or 3 months later, we won't even be talking about it. And especially so if the macroeconomics do shake out the way that our team thinks they will shake out. So that analysis, coupled with, Charlie, as you've been saying, there's a lot of innovation still happening in the space. There are these really cool projects, layer 0 tokens, layer 0 projects that are coming out. You couple those innovations, exciting innovations, with a shift in the macroeconomics that we're expecting, and the stage truly is set for the entire crypto markets to roar higher in 2023, but even more excitingly, for certain cryptos levered to the projects that Charlie is talking about to go absolutely ballistic next year. And I really believe that is the most likely outcome in this situation. Charlie, I'd love to hear your opinion on everything that I just said. If you agree with that, you disagree with that, how you feel about the macroeconomic backdrop and how it's influencing crypto prices.
You yourself brought up a good point a few months ago, and you said that when bad news is not pushing the price down much, but good news is pushing the price up a lot, then that we're going to be turning the tide. And if you look at, we're constantly getting pummeled from macroeconomic forces, from internal situations, but things are not really moving much. But at the same time, one tweet by the CEO of one exchange could push the Bitcoin price up $1,500 in one day. And so things like that make me very promising. And like you said, the macro headwinds, if we were in a much different macro environment, all those things that collapsed that we talked about wouldn't have, because they relied on the ability to borrow cheap capital. And once they couldn't do it anymore, and they had to figure out a way to make a lot of profit very quickly, and they couldn't, they collapse.
Mm-hmm. Yep. Nope. And entirely true, Charlie. Entirely true. So, folks, I think that's the quick summary of how Charlie and I are looking at the industry right now, and it's why we both remain steadfastly optimistic and bullish on the cryptocurrency markets. That this is what cryptos do. Charlie can tell you, he's been through all of them. They boom and then they bust and then they boom again. But you got to remember that people remember boom, bust, boom, bust. Well, boom, bust, then boom again. You got to remember that part of the equation, because the money is made, the biggest money is made when the bust turns into a boom. That when you have Bitcoin going from, $3,000 to $60,000, that's when the millionaires are made in this market. They're not made by, buying in the 6th or 7th inning of the boom. They're made by buying in the 8th or 9th inning of the bust, and then riding that for 9 innings of a boom. That's where massive money is made, and that's the opportunity we're coming into right now. Bitcoin has been washed out nearly as much as it's ever been washed out in any of these crashes before. All the technicals are saying, okay, whether it's the realized price, whether it's the short-term holder cost basis, long-term holder cost basis, all the ratios we looked at, we've updated our subscribers on these on a very weekly basis. All of those things are blown out to levels that imply we are either at or very near the bottom, and we are definitely in the 8th or 9th inning of the game. So if you have a multi-year time horizon and you believe in the power of cryptocurrencies to positively influence the world, then this is the time to be buying. Regardless of the FTX situation, regardless of Terra, regardless of all the stuff that's happened, this is the time to be buying. And I think that's where Charlie and I both very strongly agree at the current moment. So, Charlie, do you have any parting words for our subscribers at this point?
HODL.
There you go. HODL
on for dear life.
There you go. So that's the as many of you know, that's one of cryptocurrency's famous catchphrases. Didn't it actually start by somebody mistyping hold online, and then it just kind of stuck?
Yeah. He was in the chat group, and Bitcoin price was falling from like $10 to $1, and he posted in the chat group he was drinking too much alcohol, and he posted, he's like, I'm holding, but he kept saying hodling, and then he kept saying, I know I'm misspelling it, but I can't keep spelling it the right way now because I've gone too far.
And that is the origin story of hodl. But
if you had bought that night, you'd be a billionaire.
Exactly. And that goes to show you guys, that's how long Charlie's been in the space. So if anybody knows a thing, the State Farm commercials, we know a thing or two because we've seen a thing or two. That's Charlie Shrem for you, folks. He knows a thing or two because he's seen a thing or two in cryptos. He's seen it all in cryptos. And so I'd venture to say he knows it all in cryptos as well. And if he's bullish on things that are about to go down in the space and the prospects for money-making opportunities over the next 12 months, 3 years, 5 years, and 10 years, well, so am I. But I'm also bullish because of the positive macroeconomic backdrop. So in any event, folks, I think that's all we have for you today. I really appreciate you guys sitting down and listening to this podcast, this meeting, this call, whatever you want to call it. It's us reaching out to you to say, hey, we know it's been tough. We know it's been 8 innings of misery, but it is the 8th inning. I cannot emphasize that enough. It is the 8th inning. And when you get 9 innings of a bear market, what comes next tends to be 9 innings of a bull market. So you want to get in the game in the 8th inning, 9th inning of the bear, and ride through 9 innings of the bull. That's what's coming up. That's the opportunity we have right now. We're going to wait for the technical signals to confirm a buying opportunity. We're not going to go chasing falling knives. But we are watching those very closely, and we expect them to flash very soon. And once they do, we have a whole list of cryptos on our watch list ready to go. We will get a portfolio ready for you, and we will ride 9 innings of the next bull market to some very significant gains in our and hopefully your portfolios. So without further ado, this is Luke Lango and Charlie Shrem signing off. Thanks, folks.